Hey everyone, this is Kirk here again at OptionAlpha.com, and welcome back to the video recap that we do here each and every night on the membership side of our blog. Today we're going to go over all of our opening closing trades for July 9th, Wednesday. And remember, if you guys have any questions or comments as we go through today's trades, don't be shy and add them right below. I'll get back to each and every one of them personally so that we get all of your questions answered about why and how and whatever the case is. All right, so let's start with the the closing trades tonight I want to start with, in fact. And the first one is EWW. So this is one that we actually had originally entered in June and bought the spread, which was a debit put spread, the 68.66 debit put spread for EWW back in June, and paid about 109 for it. Now, we were fortunate enough, as we were going through June and getting towards July, the stock really didn't move. So we had an opportunity to roll it to July for $1. So that brought our price up to $1.10 in cost. Now today we obviously just sold it back to the market for a 20-cent credit, so we took a little bit of a loss on this one. But the whole idea here is that we did extend duration for another month for $1 and gave us an opportunity to potentially make a profit on the trade. It didn't go our way this time, and we've had really great trades this month that have gone our way, but you can see that it really didn't move that far in June, right? Kind of a little bit upwards, and now in July here it's just kind of really taken off. And with our strikes at 68 and 66 and our break even around 67, that's just a really huge move for the stock to make in the next 9 days. And one that we just don't think is going to happen. So at this point, it's well worth just taking off the trade. And if you want to get into another trade for August expiration, you can absolutely do that. But you're just going to pay a premium to roll it to next month. It's better just to reset your strikes and move on. BA is another one that we took off today, and that's Boeing. We had a calendar on Boeing, the August-July 120 put spread. So we wanted Boeing to go down. We were actually fortunate enough that Boeing actually didn't even come that close to our strike at 120, and we were able to take this off at basically a scratch, which is a 115 credit on this trade. So we were able to get rid of this trade before July expiration. That's obviously the most important time to get rid of the trade, is right before that first strike expires for these calendars. And you can see that we even had kind of a lower trajectory around 120 or so, and the stock really hasn't moved since we entered that spread. But we did get a nice move up in implied volatility as we're getting towards earnings. So we saw a very slight move up in implied volatility from when we entered the position. Again, just made us kind of really not lose money, not really make money because the stock hasn't moved either. But we'll take it at this point and kind of roll this thing off at a scratch. Don't want to risk anything happening between now and then and kind of losing anything. This is at least the time that we start evaluating trades really hard, kind of inside this 10-day window, as to what we want to do with them, whether we want to roll them, just take them off as a scratch or a small loser, or whatever the case is. All right, so two new trades that we put on tonight. One is POT, which is the Potash, and the other one is WMT, which is Walmart. Both of these are calendars, so they very much are structured in the same way. And each of them for a different reason. We traded POT on the put side with the 35 strike, and with Walmart, we traded it to the call side, or a little bit bullish, with the 80 strike. And so I'll show you why we did that on each of these right now, but very even in how we're placing our trades right now. Still trying to stay a little bit neutral while implied volatility continues to rise as we get kind of deeper into earnings season. Now remember, with all of these calendar spreads, we are buying the back month. So in this case, the back month is now September. So we stick with the same strike price in each month, the 80 call in Walmart, the 35 put in POT, and then we sell the front month, which is August. So we sell the 180, or in Walmart, we would sell the 80 calls for August, buy the 90 calls for September. In POT, we're going to sell the 35 puts for August and go out to the next month and buy the September 35 puts. So short the front month or selling the front month to open, and long the back month or buying the back month to open in both of these cases. We paid about the same debit in each of these, so it was actually pretty good not to have to have a debit. That's why we were able to scale up our position in both of these, because the debit was actually pretty small, 29 cents, 26 cents, as far as what we could potentially lose at July expiration, or at August expiration, excuse me. is pretty small per lot for that. So we kind of scaled it up and we did 5 of each, just making it a little bit more of a healthy position to possibly make some money in. So let's go look at POT. And you can see that the stock is continuing to move down. And so what we want to do here is trade something to the bottom side, because we think, you know what, if the stock is starting to, kind of, decouple and unravel really, then we're going to, continue to play that trend. And we don't want to be contrarian in this instance. Sometimes that works, sometimes it doesn't. But in this case, let's going to continue to play this kind of move lower and see if the stock can't float just a little bit lower. Now, if we actually look at the Analyze tab of where this trade profit loss diagram looks like, you can see that by trading it at about a 28 cent debit on POT, then we actually really start making money at expiration anywhere below where the stock is trading right now. So even though our stock is centered around that 35 strike, so long the back month, which is September, short the front month, which is August, everything centered around that 35 strike, because of the pricing, we were able to actually make this a very, very wide calendar. So we have a huge profit potential window in here for POT. Basically anything around 35 up to about 36.5 or where it's trading right now. I'm sorry, 33 up to about 36.5 to where it's trading right now. So if I go back to the chart, that means that our profit window is basically at 33 to 36.5, which is where it's trading right now. That's a huge range for the stock to be in. And really, frankly, on the downside, if this thing continues lower, it could continue much lower, much faster. So we're giving it a lot of room, and that's a big, big profit window, which is why we like this trade. Huge profit window and small out-of-pocket risk. So it's a really good trade. I really, really like this trade. And we'll see what happens with it. Walmart is virtually the same thing except flipped over on the other side. So instead of trading the put side, we're actually trading the call side. Doing the same thing here. We're kind of playing the breakout, saying, you know what, if Walmart's going to continue to go higher, maybe it continues to go higher as it gets towards earnings. Who knows what, where it's actually going to go. But that's what we're playing, right? So we're playing a possible move higher in Walmart, people coming in and continuing to buy up the stock. If we go to the Analyze tab of Walmart, you can see it's a very, very similar setup here, except on the top side. And here's where Walmart is trading right now, kind of this dotted line right in the middle of your screen. And you can see that at expiration, we only need Walmart to move up just a little bit before we start making money, right? And here's that big calendar spread looking payoff diagram here. Everything centered around that 80 strike that we talked about before. But because of the pricing, just like with POT, we've got a great window between, call it 77.5 and about 82, where we actually make some really, really good money on this trade. So that's what we're looking for, is about 77.5 to 82. Again, we go up to the chart here, and you can see that we've got a window between about 77.5, which is just a little bit higher than where it is right now, and all the way up to 82 on the top side. So again, massive, massive potential here. And big profit window for Walmart as far as just what we're risking and what the payoff could be. Obviously, we'd like the stock to close around 80. That's a huge move higher. I don't know if it'll get there, but if it starts trending in that direction, that'll give us a good opportunity to close out this trade well before expiration for August and bank some money. So as always, I hope you guys really, really enjoy these video tutorials. I know we've covered a lot of ground tonight, and if you liked this video and found it helpful, please do us a favor, share it, click the like button below. This really helps spread the word for us. Now remember, if you are watching these video alerts but you're not a member of OptionAlpha.com, you're getting this information about 15 days after it's sent out to our members. So that really means you're about 15 days behind the 8 ball and you're missing real-time updates. But the good news is you can test drive everything we have for free for 7 days. Just go to OptionAlpha.com, sign up for the free trial. You get everything that we have here. You get all these alerts, these video tutorials the same night that they're published, everything that's in our platform as far as charts and the ultimate strategy guide, the whole works. Once again, if you have any questions or comments about the trades we made today, feel free to add them right below here. I'll get back to each and every one of them personally, and happy trading.